Welcome to Financial Tea with Damilola, where we talk global markets and explain what moves money. Today we're talking about an exciting topic. Sometimes markets move due to inflation data. Sometimes they move due to Fed decision or central bank decision. Sometimes they move because of maybe a political situation arising or geopolitical situation arising. Sometimes they move because of a political figure. Donald Trump. Yes, we're talking about Trump today. And you wonder, why does markets move because of a political figure? It's because markets, the global markets, is forward looking. It's about policy expectation. It's about growth prospect. What is going to happen? What is Trump going to do? That is why market reacts the way it does to Donald Trump. So the macroeconomy. So when everything is moving, the stock markets, the bond markets and everything, is moving because of expectations of the markets. Like, what's going to happen? Is Trump going to raise tariff again? Is he going to cut tariff? Is he going to stop supply chain or something? Is he going to... All those things are why markets react to the Trump news. Trump is like the wild card in the global markets these days. Everybody just... When Trump just increases tariff, you know how it affects everything. The prices of things go up, so it can cause inflation, it can increase prices. That's part of the reason why, because it's just very, very watchful of whatever Donald Trump might say. He's going to remove another tariff, he's going to increase it by 100%. And when that happens, the US dollar, which is a safe haven, investors move there, because everybody is also wary of their investments. Everybody moves there. Of recent, we've been seeing gold gain a lot because people are like, why dollar every time? This Trump. Because of Trump, people have been moving to gold. The gold reserves, a lot of countries are stacking up their gold reserves, and the prices of gold is going up a lot. It's also majorly due to Trump. People don't want just to be relying totally on the US economy. So some countries like China, they are building up their gold reserve. That's why gold has been jumping the way it's been jumping. You can wear your investments once in a while and still have the prices be going up. If you've been wondering how to invest in, buy gold shares before you can buy good bars and the likes and all. So that's a way. That's by the way. I'm not giving financial advice. What to do? But in a way, you know, the expectation of a policy and how it will affect is why investors become jittery. Some of them just jump and leave, and or some of them just, okay, let me go back to my dollar denominated investment. It's safe and nothing really will happen. And also, all this tariff has caused some inflation in these places. And if you've been listening to me, you'll know that inflation is what central banks and the Fed Reserve and everybody watches. So, like I said, everybody watches out for Trump. Things that happened when Trump cuts, when he was increasing tariff back then, what happened was the US stock market, it became very volatile. A lot of investors, they were fearing, and so a lot of people were concerned, and so it became very volatile. There was downward movement and everything, and everybody was just concerned. And then tech and manufacturing, they reacted first. So at that point in time, you were seeing stocks prices were just coming down and coming down and coming down. The US dollar strengthened. That's because of uncertainty. When there's uncertainty and everything, like I said, investors, they like safe haven, so they jump and go into the US and US investment and everything. So US strengthened. But like some other investors, they went the gold way, because Trump also made sure that some of them were thinking of having alternative, there's alternative safe haven. So a lot of countries, a lot of investors started putting their money into gold, which is why gold also went up. Then emerging markets, call them emerging markets, the African markets, some of the Asian markets, some of them, they weakened because people were putting their money, so people were putting their investments moving it to safe haven when the tariff happened. That's how Trump just affected everything. Trump just affects the global markets and everything. I see. So then oil and commodity fluctuated. Oil prices were fluctuating. It was also uncertainty. So, like we said, Trump is just like an uncertainty in the market, in the global market. Trump is an uncertainty. And so it's why you pay attention. See, we came. That's because generally investors will be running, will pull out their investment from emerging markets like Nigeria, um, Nigeria, Ghana, Senegal, the likes. They want to go to safe haven, even though the interest rate is lower in the US. They would prefer to just take their investment and go and put it at 3%, where they know that their money will not crash. What is it there? So emerging market currency will weaken, and all those things are part of the reason why you have to care about Trump. Then oil prices and the commodity market was also very much affected. So generally, there's uncertainty, and when there's uncertainty, the global market becomes volatile. So everything just, you'll be saying red, 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 red. The S&P index will come down. You understand? So it's a lot of uncertainty, and investors don't like uncertainty. They don't like uncertainty. And by the way, uncertainty is why they pay that premium and invest in emerging markets. So that's why the interest rate in emerging markets is higher than established markets. It's higher than Britain, is higher than US. The rate in Britain, US, if you check it, is between 3%, and the Europe is also 4%. The interest rates, the benchmark interest rate 3.5. In Europe, I think around 4%. So, but emerging markets, you see, they offer 15, 20, above 10%, basically because of uncertainty. Investors just know they don't like uncertainty, so they price it in. Now you see why you have to care about Trump and whatever you're doing and the global markets, the macroeconomics and everything. It's a very, very, very important factor to consider. I hope you have enjoyed watching this episode of Financial Tea with Damilola. Please subscribe and share. Thank you.